This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. In our new Investor Perspectives series entitled How to Understand Blockchain, you'll hear about primary trends and what makes for a successful company in this segment. As the COVID pandemic passes, we emerge into a new world. The blockchain space has made tremendous progress in setting up substantial networks and meaningful applications. Blockchain continues to drive change in the tech space, in particular fintech. We have investors and startup founders describe the changes coming up. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Our first guest is David Johnston, Managing Director at Yeomans Capital. Yeomans Capital is David's personal family office investment arm, which acts as an early-stage seed investor. Yeomans' investment thesis is to only invest in distributed apps where the Yeomans team of experts can have a significant positive impact on the project. In the same vein, Yeomans only advises projects in which it deploys its own capital. David, thank you for joining us. So what do you see as the primary trend in this segment today?
Well, at the beginning of 2020, I was really talking a lot about DeFi, decentralized finance. And we saw that cross about $1 billion in assets locked in DeFi contracts at the beginning of 2020. And I think that's now past $20 or $30 billion in contracts. And so there's been an explosive growth in people, mostly on Ethereum, locking up their value in order to receive an interest, in order to use decentralized exchanges, in order to stake in protocols. In a world where everybody's searching for yield and banks really aren't offering that anymore, 6, 7, 8% annual yields sound pretty good. And so with the growth of stablecoins in the last few years, people don't necessarily have to take currency risk. They can hold the stablecoin of their choice, say USDC, which is issued by Coinbase and Circle, and have a US-backed instrument in which to do these decentralized smart contracts. And so they can take that interest, or if they're bullish on Ethereum or Bitcoin, they can get interest in those tokens as well. That's probably the biggest trend. The other one that's really coming up is non-fungible tokens have sort of exploded. You've probably seen the headlines about this artist or that artist offering some NFT and selling it to the public. And so that's going to be a whole another area. But I think they're all sort of moving in parallel.
So what makes for a successful company in the blockchain area?
Well, we don't primarily invest in companies, but rather in decentralized applications. And we're defining those as open source projects that have their own token, that use a blockchain and incentivize people to do some behavior. So in the case of something like Uniswap, the popular decentralized exchange, they incentivize people to provide liquidity to the exchange pools. And that was sort of a big breakthrough a few years ago. And now they're, $10, $20 billion project. And so we look for those type of projects that we think can impact 1 billion people over the coming decade. And that's sort of our main criteria.
Our next guest is Dave Hendricks, CEO and founder at Vertalo. Vertalo is a cap table, compliance, and investor onboarding platform utilizing blockchain to connect and enable the digital asset economy. Chain-agnostic pioneer in direct custody and secondary liquidity, Vertalo supports the ongoing asset management needs of private companies and broker-dealers. Dave, thank you for joining us. So what do you see as the primary trend in the segment today? Blockchain and crypto has come a long ways, even in the last few years, but what are we seeing now?
Well, first, I think you see not quite mainstream adoption, but you see kind of a little past early adopter kind of activity in kind of Bitcoin and cryptocurrencies. But what you are seeing within the adopters is an expansion past the use of the technology to the use of the technology as money to provide an alternative financial system. And the most interesting part of that alternative financial system is something known as DeFi, or decentralized finance. And this is basically the business of, it's called yield farming, where you take your digital assets, your Ethereum or Tezos, and you loan them out. You stake them, and you get paid an income stream back, known as APY. That was in early 2020 was about a $71 million kind of business. It is now somewhere in the $40 billion business. So when the DeFi market increased dramatically, much bigger than the increase in value of Bitcoin, the increase in the amount of money that is under management and DeFi protocols using cryptocurrencies has grown dramatically.
Great. So what makes for a successful company in this DeFi segment?
Well, first of all, they probably have to have a very strong meme game. Okay. So if you want to be, so a meme is maybe a picture, okay, or a symbol that tells everybody that you are cutting edge iconoclast, and it's a form of branding. So once you get into cryptocurrencies, your appreciation for memes is not far behind. And so you might see Pepe the Frog, or you might see the Doge, the Shiba Inu dog, okay? You might see pictures of Elon Musk riding a Shiba Inu, okay? So if you want to get into this, not only do you have to have a sense of humor and also a high risk tolerance, but you also probably need to know a little bit about smart contracts and cryptocurrency wallets, because you have to do very interesting things with technology and this money if you want to become the ultimate job to have in 2021. And you want to know what that job is?
What is it?
A yield farmer. Okay. So, this is something that, your kids, when you're sitting there helping them with their algebra or their geometry or probably their differential equations, this is what they really would want to apply it to, is to actually becoming a yield farmer. And that way, if you teach your kids that they should study comic books and learn about memes and then learn how to be a yield farmer, then when you're old, they can buy your house, okay, and make a great old age for you. So that's what you want to do with your kids. More comic books, okay, more video games, more collectibles, study calculus and math, and then learn how to be a yield farmer, okay? This is it. I'm telling you, this right here, in 2 years, you're going to wonder why you didn't take my advice here, Hall.
So what would be a past analog to yield farmer? If you had to put another name on it from the past, what name would you put on that?
Well, there's two things: either gold miner, okay, in 1849, or a guy who sells tools to gold miners. One of those two. You can play both. You can either create a protocol or create one of these DeFi offerings, or what you can do is you can say, I'm going to go mine the interest that working these DeFi protocols pays me. And so there's a lot of choices. Today, if we're talking about investors today, a lot of investors are investing in DeFi projects because they get some of the initial coin that's created by these DeFi projects. They don't care about the equity in the company. They want this other thing, which is kind of like it's like a bonus coupon that these investors get from these projects. These projects basically can't be sold for equity value. They don't have enterprise value. What they do is they have technology that enables people to leverage them to make money. And so investors today invest in DeFi projects to get some of the coin that they invent that people work to get from mining. So your viewers, some of them are going to have heard about this and they're going to say, okay, wow, this is really cool. Others won't have heard of this. So if you're listening to this and you are still confused, and you probably are, you should go look at something called Yearn Finance. You should go look at something called SushiSwap, okay? Or you should go look at something called Maker, okay? Those are some of the protocols and projects in decentralized finance. This area right here, what I'm telling you is similar to telling you about Bitcoin in 2015 or 16, okay? It is it's small now, but it's a very, very big thing coming up.
Our next guest is Christian Khmir, managing partner at Sustanty Capital. Sustanty Capital is a blockchain venture fund headquartered in Newport Beach, California. Aside from investing in blockchain-related projects, the firm lends its expertise to existing companies interested in security token offerings. Christian, thank you for joining us again. So what is the primary trend in the blockchain segment today? What's really driving it forward?
Yeah, I think one word that probably describes this the best is acceptance. Right? So there was a lot of pushbacks in the early days from government agencies and traditional financial players and so forth against these technologies, and there specifically the implementation of obviously cryptocurrencies. And now what we see, and we talked about this on a separate podcast, you see the vast majority of countries working on their own central bank digital currency, so digital bearer instruments. So the larger trend is really that these governments and corporations and enterprise and everybody within the ecosystem has accepted this as a foregone conclusion that finance and then larger than that technologies will be facilitated on decentralized solutions.
So what makes for a successful company in the blockchain segment today? Who's going to be a winner?
Well, so given the fact that the space is largely driven by open source development, so if you think of Ethereum, this is entirely community-driven development. Community is what we look for. So if you look towards large fundraisers that didn't actually produce any useful solutions, it's typically because there was no community supporting it, right? So on the Ethereum blockchain specifically, you got all these developments, and it's not necessary at this particular point in time a very useful implementation. It's really slow, it's really cumbersome and so forth. But you got an enormous amount of projects running on that because of the community supporting it. A lot of invested interest, not only in terms of putting money behind it and making money from it, but also just intellectual interest in seeing this paradigm succeed. And then the two things that you want to add to that is specifically within our space of quote unquote blockchain is the interest alignment. And we'll talk about this probably a little bit more, because that really what sets it apart from companies before that. So we think about this more in the way of you got projects that can either be run by a company or by a network of interesting parties. So you want to align the interest of people that participate in the network. So we already see the nascent developments of things such as decentralized Uber, decentralized Airbnb. So with the interest of all the stakeholders that participate in the network are aligned, and there's no external entity that is just extracting value. And then lastly, and probably most importantly for long-term viability of these solutions, is the long-term thinking and looking towards what makes up this new development stack, what makes up Web3. What are the missing pieces that we actually haven't developed that people are working on, i.e., how to get real-world assets into the ecosystem. Because for the most part today, a lot of the trading, a lot of the activity is limited to what I call digitally native assets. It's the cryptocurrencies, it's Bitcoin. It's other assets that were born online that don't, at the moment, have a digital world, a real world paradigm attached to that.
Our next guest is Jake Ryan, CIO at Tradecraft Capital. Tradecraft Capital manages a macro thesis-driven crypto fund with the objective of delivering asymmetric returns by investing in the emerging asset class of crypto assets. The firm's investment thesis focuses on the next long-wave economic cycle, which the firm calls the age of autonomy. Jake, thank you for joining us again. So what's the primary trend in this segment today?
What's going on with fiat currencies and central banks around the world? Sound money principles are bringing in more and more investors who are worried about the purchasing power of US dollar. So around the world, you're seeing less and less countries like China and Japan investing in treasuries. They're really diversifying, and we're seeing a sea change a bit in how people look at bonds and treasuries. You know, we were in a 40-year bull cycle with bonds since probably 1980 or so, and now we're seeing a shift in that. So people are responding with different investment plans to maintain their purchasing power.
Great. So what makes for a successful company in the segment today?
Well, I think if you're looking to build a blockchain project, you know, you have to have several key components. You've got to have a great team. Like any other early stage or venture style investment, people are looking at the same things. You know, do you have a moat? Is there something technologically important that you're bringing to market? The thing that's different about crypto a bit is network effects and the importance of building a big ecosystem and for everybody to be properly incentivized to act in everyone's best interest. And so people and crypto projects that really build good incentive systems within their crypto project really have a chance to do very well. We've seen that with things like Uniswap or Compound or some of these DeFi projects where they incentivize, you know, investors or people to provide liquidity or to vote or to do various things. And those projects that really have good monetary policy and good incentive systems are doing really well within the crypto space.
Our final guest is Rashad Kurbanov, CEO and co-founder of IONIT. IONIT is a digital asset securities platform that powers tomorrow's private markets by providing the end-to-end digital infrastructure to issue, manage, buy, and sell digital asset securities. Rashad, thank you for joining us. So what's the primary trend you see going on in blockchain today?
If we look back at the technology and what was going on in the media, there was an expectation that blockchain is going to solve everything, every problem in the world. I think now is much more realistic, much more in-depth understanding of where it works and where it actually doesn't, what it can and cannot do. So now we're getting probably to a much more exciting phase in development of the technology where we're going to start seeing concrete real world applications, whether again in the payments industry, with the central bank currencies, whether it's in transportation, logistics, and other areas that can benefit from distributed ledger technology.
Right. And so what makes for a successful company in the segment today?
I think the answer is basically the same whether you're in the blockchain space or not, right? The successful company is the one that is solving a real world problem and solving in a way that is more efficient than any available other technology. I think we should always keep in mind that incumbent technology and incumbent process has an inherent advantage because nobody needs to switch. So a successful company is either the one that offers an advantage that is not available anywhere else, or is able to create a new market. And that's what everybody kind of needs to look at. Just simply saying that we're using blockchain doesn't really make it a success, right? The evaluation is pretty much the same as for any other technology, any other business, any other investment.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today.